Taco, today we are going to talk about the biggest mistakes that we are not us, but that we see that clients make. And it's not bad that you make those mistakes.
No.
It's very common. But we want you to, I think with this video, understand, as maybe you can work on it for yourself, and with this we're speaking to you as our viewer, how you can improve those points. And what is, let's say we have, how many points did we identify?
5 points.
Five points.
There are more, of course, but we thought let's start with 5.
Correct. So let's do one each. So the first point is, I think what is very, very common is that people buy something for a price and they think that is the price that is what the stock is worth, right? Or the bond or the option. So they get stuck to this specific price and they do everything to convince themselves that that is the correct price.
Yeah, I totally agree. You really notice that people, for example, they think actually after a while when the stock is negative, down, they actually want to sell. No, that's you're right. You can sell something, but they are waiting until the recovery of the price. So the red becomes green. That's not a good criteria for the market, because the price is the price. If you are not confident, you can sell or you can buy extra, but whatever the plan is,
correct.
But only to wait to your price because it's shown in your portfolio.
Do you remember in the past when we were working still for Alex and Bing Bang that we had the possibility to have your portfolio set at 0 from the 1st of January?
Yeah.
And that was actually really good because you close the book year and then, okay, now this position is making money. It makes a really big difference mentally for you to look at positions.
Yeah, that's a good one, And I think it was done for that reason. You are like an entrepreneur. This is the new situation.
Correct.
You don't have to forget, of course, the past. I mean, you still can see what was your result, but to have a new vision on your position, that's
absolutely
good.
So your price is not the price.
The price, no,
the price
exactly.
in the market.
Related to that, the second one, it's I think a very common, and we are not the first ones to say it, but not be able to take losses.
Yes.
It's also related to what we just said, but it's more in general. Like to take loss, we are speaking here about investing, positive shares, positive investments, and you are confident and you start. But I think you must accept that some things. It's also investing, that not everything is always green if you buy it. So you need to have a plan also for the situation that things work out differently.
Absolutely, and maybe in line with that, sorry, is not be able to take profit. Because that's another thing. People think, okay, I had the other day people in the office here and we were looking at a position with 35% up. Yeah, but now we'll go further and further and further, and then there's no guarantee. So if you don't think, maybe instead of saying taking losses or taking profit, is think about your exit.
Exactly.
People don't think when they will leave that position.
Like a plan, having with every position. Yeah, I think that's, and also the knowledge. I mean, people, maybe they don't know that there are ways to reduce the risk, a stop loss order,
correctly.
A put option. So knowledge or just not having a plan. And that's very, very important.
Absolutely.
Number three,
the confirmation bias, and that is maybe a little bit in line with the previous two, because it's all, of course, the emotions about investing is you buy a stock and you only want to hear the good news. And I have an example myself. I bought a stock and I'm going to give it here. I've sold it already, so it's no advice. I bought Hylian. Hylian was a company that had, I really liked it. They had beautiful trucks, you remember? And there was the hydrogen, and I was reading all the, it will go this and it will that, but the company was just burning cash. I was saying, it will be fine. And I was only looking for the good news. So, and like I said, we work 15, 16 years together, and we still do those things ourselves as well. So we're human beings, we're not robots. So it's very normal to do those things. And so the confirmation bias is to interpret everything in your favor. Looking for that news that confirms that you made the right decision, and then you can see that also in normal life. No,
I just wanted to say, it's something human. It happens in normal life, but with investing, we are here to give you practical advice. It's not good to only see that part of. It's also not good only to see the negative things. You must see the total scope and. Exactly. If you hear in the news, that share, it's my share, and it's positive, but you know actually that you're down 50%.
Exactly.
Yeah. So not a positive. The confirmation bias is not a good thing.
Not for investing. No, definitely not. Fourth.
Yeah, I think also very obvious that you should not be too greedy.
Yeah.
And greedy, I think it's not only people buying a lot of out of the money call options like speculating or high leverage. It's also greedy think that your investment, even if it's a AAA government bond, that you think that nothing worse can happen, nothing bad can happen, and maybe think, okay, this share is so good and it's down, I buy a little bit more because it's a good share. And it's not only the starting investor. I think everyone has the temptation maybe to take a little bit more risk, thinking this cannot happen, this bond is good, this blue chip cannot. But we have seen it recently. Oil prices negative, interest rates negative, blue chips 50% down. So you must always, I mean, working with leverage, you know that the risk is there, that you can actually lose more than your money. But even without leverage, thinking about, well, this can almost not happen, and base your strategy on that.
Or when people sell options and they sell too much options because they think there was no problem, or they take a too big position in a CFD, or it's all these things that you think, becoming too greedy. Greed is never good.
No, it's never good, and it's maybe also a little bit human, like we said. Like you are always trying to make the best out of it, but you must really also stick to your plan. I did say that I only want 10% in one individual share. Don't buy 5% more because you think it's a bargain, because even that bargain can go down. Number 5.
The last one I think is also very common, is what we see is that people, they become personal with a stock. This is my stock. Yeah. It has always been good for me. Well, I always say one thing, a stock is basically something that you have to try to earn as much money as possible, and that's it.
Yeah.
Don't become personal. Look always at the fundamentals. Because sometimes there's much more under the blanket than you know. So don't get personal with an investment in a stock, because it doesn't make sense. Doesn't make sense. The stock is also not thinking about you, so you should only try to think about. That's true. The board is, and some people, sometimes they are, of course, the board is thinking about the shareholders, but in general, they find shareholders difficult. So don't become too personal with your investments, with your decisions.
I think that's true. I mean, you can find a balance, of course, that it's good to know, to have interest in your company, and to follow the news. But there is a line becoming, this is my stock and my company, and whatever it takes, I'm not going to sell it.
Exactly. So to summarize, first of all, the price, your price, is not the price that the market possibly suggests is the best. The second one is not taking losses nor profits, so sticking to your positions actually related to the price, of course.
Yes.
The confirmation bias, and looking for confirmation that you did the right thing. Fourth,
too greedy.
Exactly. And the last one,
becoming too personal.
Exactly. If you can work on those things for 2023, I think you will become a better investor.
I totally agree with that, Martin.
Give us a thumb up, and we'll see you next week.
Thank you.